Futures are soft as Europe anticipates further requests for financial support from Spain and Greece. AT&T announces sales record as the iPhone 5 takes more orders in the first week than all previous models. Is Apple headed to 700? I'm Taylor Schranza, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with TheStreet, and together we bring you the morning call. And Scott, you know what, for September, that's typically a flat, boring, or down month. All three indices are trading at multi-year highs.
A lot of people like to look at the calendar, all those saying sell in May and go away, summer's going to have no action. Meanwhile, every year it's a little bit different. Obviously, there's historical trends, but if you were at your desk in August, you did unbelievable, and it was followed up in September. So right now, there's still so much to like in the stock market.
Right, and even this week, we're going to be a little bit quiet today because of the holiday, but remember, guys, we're coming to quarter-end options expiration, so we have quad witching on Friday. We're going to see some volume, some volatility come back into the market. So how are we positioning ourselves in the SPX going into that?
Well, on Friday we came in and we were probably the most overbought that we've been in days, let alone weeks. I even think we haven't seen this reading maybe 2 times in the course of the last year. So for me, I sent out the note, I tried to tweet saying, at this point you could sell some excitement, trim your positions, and maybe even look for a cute short. But the cute shorts have not been working. Maybe, as an active trader, you could dissect it, but really the trend has been to the upside, so you want to buy the dips. If you look at the chart of the S&P, you will see, here we are. Okay, this was that low that we had in October 4th. Higher low, then the wedge for the breakout for the first quarter. Then you guys remember how we beat everyone down saying head and shoulders top, look for a break, get a little, lighter. And then we had the June 4th low. And since then, this is the last pattern, that cup and handle pattern right here. This was ECB day. And then if you take a closer look, you will see within this pattern that we consolidated above the highs, above 1422 to 1426, and then boom, QE3 rally, nice extension. At this point, we're very overbought. So I would say, for me, if we get a pullback right around to 1460, 1458, I'll probably take off the overlay that I put on for the spider short. And I think ultimately, I'd be very surprised if we give back more than half of this igniting bar, which is about 1452. And then I would say more macro support is about 1440. So support 1, 2, 3.
Speaking of outperformance, going into the sector spotlight, we're going to take a look at high beta tech, but mega cap tech on a macro basis has just been one of, if not the best performing sector of all 10 in the S&P. We're going to kick it off with Apple. What an outperformer this has been. If you're a long-term fundamental guy, you're loving it. If you're a momentum trader, guys have made their careers in 2012 trading this name. It's unbelievable.
For the last decade. And everyone always says, Red Dog, why do you focus so much on Apple? Because Apple moves. Apple trades with technicals. If you're right on a pattern, you get paid. You could be a macro equity investor sitting tight. Congratulations, you're getting rewarded. You can be a stock picker. You could be a swing trader using stops and hold for multi-week, multi-month moves. And then you could be an active trader also that might not take so much risk overnight, and you still get an entry. If you look at the chart here of Apple, you will see ever since that earnings report that disappointed, boom, 3 days, and then you had that nice push to the upside of this range here. And then this is when we started talking for a swing trader to get back involved if you took off the risk here. And then pow, this was another buy area, then you had another buy area as it went through 644. And then even recently, you remember, they sold off pre-announcement, pre-iPhone 5. Held support. This is when we got back involved in a nice 3-day move. Question is, when will it get to 700? Today, it's up 3.5 points while the futures are down. If it takes out 696.98, you're going to see it try and at least kiss the 700, and at some point, it'll get comfortably above it.
Speaking of 700, Google, what an absolute monster this one's been as well. We've been talking about that since Q4 of 2011 in terms of some mega cap tech picks.
Yeah, and everyone beat the hell out of me because it was my high beta name of the year coming into this year. Because, for the media, what I like to do is I like to give some people long-term objectives besides trading the intermediate sweet spot like I do. So Walmart was my retail stock of the year, and Google was high beta. And for 2 quarters, they didn't perform. But institutionals kept buying it. And then if you were waiting and you were disciplined, this quarter when they came out with their earnings and it traded through 620 and 645, you had your entries if you didn't buy that dip. And if you look here on Google, you will see what a move since holding this 560 area. This was after earnings. This is when it went sideways. Could have got 620 right here or waited till 645. Then if you take another look here, you will see it did take out the highs of the year right there, and it held above it. And then even recently, as an active trader, we were tweeting last week, my strong stocks hold their 21-day moving average. Look at this as a swing. Came into the 21-day. If you're on my VTF, everyone knew that we were in a little bit of pain because it started a little early, then pow. from 681 back to 710. So now if you want to draw a line here for the resistance, this is your resistance area. Maybe a little bit more consolidation, but momentum will come back in once this takes out 713, and then you go to your monthly chart. And the reason it was my high beta name of the year was because of this sideways consolidation. This high was made in 2007 when all it had was search. It's got about 5 viable businesses now, so it's on its way. I think at some particular point it's going to test or take out the historic highs of 747. So stick with it. Just depends on your time frame.
It's amazing how these guys have developed multiple business lines, just like Amazon, which we're going to take a look at next. You've got the mobile here, you have the ad, you have the tablet business. Another one up about 0.5% on Friday, hitting all-time highs again.
This one isn't as spirited or as much fun. It's a little choppier to trade than Apple and Google, but historic highs. And recently it didn't give you as many entries, but if you look at the chart here, you'll see earnings day, boom. You look at this volume, you look at just the breakthrough 230, and then it became choppy, and then if you remember, it started to get re-energized right around here, 236 to 240. What did it do? It took out this peak, and then it's been methodical, hugging the 8-day ever since. Last little flag here at highs. You go to the monthly chart, you can be a stock picker, you can be an investor. It's far from dead. I don't believe Bill Gross.
Well, it's amazing. I was in Best Buy yesterday with my nieces and my nephews, and there's 10 to 12 different tablets all over. You wonder how much, with the exception of the iPad and Apple, and that's kind of in a world of its own, how they can sustain these margins with so much competition within the tablet space, all around those $99, $199, $299 price points. So it's going to be interesting to see how this plays out over Christmas. Let's wrap up high beta tech with LinkedIn, one of those social media IPO names that actually performed really well for 2012. So they're doing something right here, and clearly the chart's confirming that.
Yeah, well, for 3 quarters in a row, they've beat expectations. And I've been talking for the last few months. I'm like, okay, can the fourth amigo link in? I'm not really that witty, but it linked in all right, and it became much more than a trade because institutions have been getting a little bit more confident because they keep performing. It hasn't been Facebook. If you look here at the chart, you will see, some of the biggest winners come with IPOs or companies that came out within a year or two with their limited float, their growth potential, and PS. You talk about entries. Last entry we talked about was right around here. This was your earnings. Remember, it gapped up, came in, kept a big portion of this gap unfilled. So here, right here on this green bar could have been your swing entry. Or if you were a little conservative, you wanted to wait right here on this day when it started to clear this 107. And then you even had a momentum trade above 110, 112. And here you are, last little consolidation. Talked about, I think I tweeted it on Thursday, Friday saying, don't rule out LinkedIn. It's getting ready to go again. PS, it's at historic highs. If you look more on the monthly chart, you'll see the room that this thing has, moving forward. It just broke above this little, wedge type formation. And this thing could be 145, 175 come year end.
All right, guys, we're going to jump into a quick commercial. And when we come back, we dive into the trenches.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to the Morning Call. We dive into the trenches with one of our favorite themes for 2012, that being the ags, in particular the fertilizer space. Scott and I have been pounding the table on this one since November 2011, expecting Q1, Q2 choppiness with these names igniting in Q3, Q4, and June 4th low certainly threw in that red dog reversal, and these names have completely outperformed. Regardless of the drought situation here and overseas, I also think that there are so many fundamental metrics in terms of relative and historical value within these names, and it's just playing out perfectly. We're going to take a look at our first one, CF, up 40% year to date, 240% over 5 years.
So it pays to stick with the leaders. And this one has been one of our favorites. And as a trader, it's given you a few different entries. We've talked about being in the leaders, investing in the leaders. And this one, has given us some price points. I remember 2 weeks ago or a week ago when the market was getting a little beat up, money went back to the ags. I'm like, ooh, looks like the ags just perked up ahead of the market. That was pretty much your last, calculated entry. If you look here at CF, besides the historic run that we've seen to the upside, remember right around this day, I think it was right here when money came back and it started to take out this small lower consolidation. Boom, look at that, 3 days back to resistance, rested, blasted through. Little doji on Friday, so it could, could rest a little bit. I would say, if it can get back to 215 right around the 8th day, that's your entry. If you're a macro equity investor, continue to stay the course there.
Well, I also think that this is going to continue into 2013 as well, because the key things that you're going to focus on, and by the way, guys, there's a USDA report today at the close New York time, is fall and spring application conversation. That's really what you want to pay attention to see how this theme continues through for 2013. Moving along to Monsanto, hit a 52-week high last week. This is one of those names where the genetically modified seeds have really helped it along, because since it's been such a poor drought situation, these seeds have been one of the performers that you can actually get something out of it. Because the big issue this year was the corn wasn't making corn. It wasn't self-pollinating, but when you use this type of technology,
you know so much about
I'm
these
such
ags.
a dork. That's what happens. You go to Chicago every month and you literally work with the traders from the ag pits, which, by the way, I'm going to be there on Thursday and Friday this week. I'm going to come back with really good content for you guys. So
cool. I'm looking forward to it, because I talk about the 8 and 21 day moving average. You're talking about pollination.
I know.
Anyway, you go to Monsanto. This has been a leader lately. It's kind of stalling right around here, but I don't think some will say stalling. I think it's digesting. A lot of guys are looking for a trade here. It hasn't really extended again. But if it wants to get through this, 90-12, you could see another powerful move. It's at the 8th day, the 21 days right there. For some reason it's been, I guess, I don't know if corn's coming in or whatnot. You probably know more there. But at this particular point, most traders probably are not in it. But if it starts to get above 90-12, you could see another tradable little move there.
Well, we're looking at the grains now. But anyway, let's move along to my 2012 pick, Mosaic. My target was 65 going into 2012. I think we get to 71 here. It's not just the fundamental and technical story. I love the balance sheet. It's got some of the lowest debt to equity ratio within the group, and they just keep increasing that cash operating margin, 26% in this year alone. So there's a lot to like in this name.
And the traders started liking it, like you said, at the red dog reversal. So let's just go right to the chart. A little bit of a lesson here, actually, because you saw it was kind of out of play in the beginning of the year, methodically stair-stepping lower till finally you got that little reversal there. But more importantly than that reversal right there, you saw commitment to it. This is when it broke to a new low and closed strong. Okay, then from there you had 3 up days in a row. Then you had this little gap that it held. So even if you didn't ride it the whole way down, you could have waited for this technical setup, either here or right there. So right there around, what is this, 49.50, it started its ascent to the upside, went to resistance, been consolidating, going sideways, and now at this particular point, I know 65 was your first target, so looking at resistance between 70 and 72 makes it actually a little bit more sense. I think 65 could be easy. This is where more resistance comes in.
Well, I love that June 4th days, because we were tactically trading some straddles there, capturing the volatility as we waited for that key Q3 movement to come along. Let's wrap it up with AGU. Recently got an upgrade to buy from neutral at Citi. Good timing?
Yes.
Started well.
Yeah. Well, they usually upgrade it near the highs.
God, doesn't it?
No, not the highs, but
yeah, but this has
before
been
rest.
a fabulous performer in the group, and traders and investors like this.
Monsanto, CF, AGU. Those have been the leaders. Mosaic, great tactical, played catch up, looking to almost, it's trying to get the leadership role. POT a little bit on the side, hasn't had the love that some of the other ones have had. And this one looks really good. Take a look at the chart here. Look where this has gone from the lows. It's all the way at the highs here. You want to take a closer look, which is what I do. I don't love, if I was trading it, I probably would have got out of it on a Friday, because it tried to go in a pretty wide range bar. Few markets came in, and this one closed more near the lows of the day. So right here, if you're actively following AGU, if it starts to break below, I would say Friday's low, you could see a move down to the 21-day moving average right here. So I'd rather see you buy this on a short-term basis, AGU closer to 100 versus right here. But if it holds this line, it's going to keep this little range intact. So right here, watch this 2-day move and then look at the 21-day moving average, because most strong stocks have been holding the 21-day if it even gets there.
Okay, and just a quick shameless commercial here. On October 10th, I'm going to be holding another webinar on the ag, specifically following up from my May webinar with Bob Lang of Real Money Pro. So we're going to go through a whole bunch of new trades for you guys, the charts, and some more fundamentals. Moving along to quick hits for quick cash, we're going to kick it off with GLD, because if we're talking about the overall market, we need to look at this as well. Traders are looking at that key February high, so we're looking to see if the momentum can continue here.
I think a lot of gold and silver investors want to declare August 20th and 21st a national holiday. That was the day that they poked their heads through. That was the day that they said this intermediate downtrend's over. That was the day to get some hedges off and start to pound right in there, and silver led the way. Now if you take a look at the chart of GLD, you'll see it is coming into some resistance, so a rest should be due right around this 171, 172. But again, a rest doesn't mean it's a short. You know, a lot of guys said, oh, it's resting here, I'm going to short it. Oh, it's resting here, I'm going to short it. No. So this was your breakout. You had a nice move, spirited move up to resistance. You know, some sideways action could be good, but then I think at some particular point it's going to take out this 172, and that's when it'll continue after a brief rest. And if you look closer up here, if you want to write down some support, here's your high-level support, which I don't think it needs to hold. I think maybe it tries and tests halfway down here, which would be around 169, 170. That would be more of a viable dip because that's what's happened the past few times where after a nice move, it comes in, hugs the 8-day, and continues, and right now it's extended. So maybe some sideways action, and then off to the races.
I think that's an awesome point that you make, where just because it's taking a rest doesn't need that you have to short it.
Right.
I think a lot of people get trapped there, so I think that's a great point that you bring up. Moving along to Goldman Sachs, look at the XLF, guys. It was at new levels on Friday. Again, you have that FOMC bid in there. Goldman up just over 2%.
Well, that's one of the lessons, which I actually did it again. But I made some good money long Goldman, then I sold it early, then I looked for a cute short, and it wasn't. It just kept going. So some of these things could always go further and longer than you think. But on Friday I tried it again, so I am short a little Goldman Sachs from here. Big deal. It's just a cute short. But anyway, the more important thing here on Goldman is Goldman led the way of the banks. Like same way silver was the day before gold, Goldman went the day before JP Morgan ignited. So if you trade things as groups and you learn how to follow the money, it gives you just a little lead time before everyone starts talking about it. Now, if you look here, look at Goldman. I want to show you something, okay? This was when Goldman outperformed and really stretched, when it started to finally get above this, what level was this? This was like 107. And look at the day here, okay? This was September 5th, okay? September 5th, Goldman closes near the highs, breaking above consolidation before this nice move. Now, if you go to the XLF real quickly, okay, this is the day after, okay? This is actually September 6th. So on the day that Goldman Sachs was breaking out, XLF was still hanging out right here, okay? So it went before, a leading indicator to the banks, and then the XLF went and it went. As far as even JP Morgan, look here too, okay? This was September 5th right here, okay? This day, look at the date there, September 5th, still in the base. So it gave you a day to position and get ready for the next day when it blasted off, and now look at this nice move back into resistance. So there's always, the market's always telling you something, so look at it with the glass half full versus half empty, which is why the bears have been in a lot of trouble lately.
Moving along to Las Vegas Sands, ticker LVS. Those seem to have been active the past couple of weeks. Las Vegas Sands, Wynn, MGM. Analysts have been a little bit positive on this one lately, but I'm going to leave this one up to you because I just love watching you trade this name.
Well, if you remember when they announced earnings and it was horrendous, and people were like, oh, they're going to short it now. I'm like, short it now. It just went from 62 down to here, and I showed the reversal, the capitulation low that if you're a swing trader, you might even still be in there, besides the 6 other small flag type entries it's giving you. So if you look here on LVS, you will see this was the day that earnings were announced, where it opened lower and closed higher. Okay, that is a reversal. That is what we call a day to take notice. And if you go here, I'll put in some volume for you so you could actually even see the type of volume we had there that day. Look at this. Look at the day it reversed. Volume was attached. People complaining about volume. No one was complaining about volume that day when it reversed. And then it went sideways, and this could have been your second entry. You had a move, flagged again, another entry before it went. Here you consolidated longer because it was a bigger move to digest, and then boom, there you go again. It opened, closed a little off the highs. I think a rest is due, but it's above the 8, the 21, the 50, methodically moving up and rewarding those that tactically go after a situation when they show you, constructive composure.
All right, and let's wrap it up with Facebook. This one finally got some love last week, but what a horrendous summer this name has had. Yeah, it's been tough. It's one of those IPO names. It's certainly not like a LinkedIn.
No, and there are 20,000 reasons behind it, but we're not even getting into that. But we will talk about discipline, okay? Because we gave some type of strategy, I think a month or two ago, when it actually looked good, and it failed. No big deal. If you take accountability and discipline, you get out of the way. So before we go to the chart, I just want to show you how it looked right here. Let's go. Now we go. Okay. Basically, we caught a nice little trade here. Once it turned higher. Remember that trade? Then it was going sideways. So I wrote, oh, you know what? This little cup and handle pattern could yield some type of breakout if it gets above 32. So it's a nice buyable pattern around 32. Let's put our stop in right there around 30 and a quarter. So Kramer did it on his off the charts program, giving that kind of strategy, saying maybe, if you didn't pay up here and you didn't pay when it failed there, it's looking a little bit better. What happened? Failed, boom, boom. One more. Stopped out. Stopped out. Big deal. Lost $1.25. It was a nice setup, didn't work, didn't just continue to buy all the way down and hold my nose and go underwater. Took accountability, it was fine. Losses happen in our business. So now fast forward to where we were here, okay? This was the day that that Zuckerberg said I'm going to hold for a year. The day that they said we're going to, basically buy back a decent percentage of the float, and that was the day that it gapped up and never filled it. So that was your swing entry around 1840. Okay, and if you got involved there, you're more than made up for that other time it didn't work. And if you didn't get involved there, this is when it started to trade above this small little flag type pattern showing commitment. That was the trade, 1940. Boom, gapped up the next day into his appearance on fast money, and now we're coming back into resistance. So it shows you how you could tactically try things. First time trying it here where it didn't work, you get out of the way and you don't suffer this pain, and then try it again right here and you make it back. But as long as you could acknowledge what's going on in it, you'll be fine.
Hopefully you were long a lot of Apple over the summer, because this one was pretty painful. All right, guys, everyone have a great week. Don't forget, on Friday we have witching, so we hopefully will see some volume and volatility come back for you traders out there. Catch Scott.
Wait, before we end it, I just want to say Happy New Year to those of you who are celebrating the New Year.
Everyone.
I know I'm at work. I should be in Temple, but I just moved. I don't have a Temple yet. I'm going to have dinner tonight. Half day
better
for me.
make Mom happy.
Yeah, half day for me, so I wish everyone a happy, use a little honey on that apple of yours in order to get a sweet New Year.
Well, that's great. Happy New Year, everyone. So, well, maybe not Scott today, but the T3 Live team as they wrap up the charts for us every day on Real Money Pro, Options Profits, and T3Live.com.